Hey everyone, welcome to Compound Thesis, where we discuss the intersection of crypto and the capital markets. I'm Jim Hiltner, I'm the head of sales at Compound, and I'm super excited to be joined today by Chuck Mounts, the Chief DeFi Officer, and Charles Jansen, the head of DeFi Transformation at S&P Global. S&P Global, I'm sure all of our listeners are very familiar, but leading provider of market intelligence, indices, and the largest credit rating agency. Full disclosure, Compound Treasury received a credit rating from S&P back in May 2022 as the first DeFi-backed company to do so. Chuck and Charles, welcome to the show.
Thank you. Really happy to be here.
Yeah, thank you for having us.
Yeah, this is my first time doing a two-on-one interview, so I'm excited to bring this out to the market. I know you guys are you guys are in London right now, so appreciate you spending some time while you're busy on the road. But wanted to start with a little bit of a background and kind of share a little bit about the DeFi unit at S&P that you're building and really what your roles are there. Just curious, given the fact that S&P has really been focused on indices and credit ratings in the past, now all of a sudden is kind of like looking at the DeFi space. So just curious the origin story there and how you guys are bringing this new initiative to market.
Right, great. So thanks. So our team is maybe 6 or 7 months old now. And it was really formulated by really a triangulation of Charles and I having separate conversations with our CEO and different members of the ExCo, kind of talking about the need to focus on the emergence of decentralized finance. And Charles and I come from very different backgrounds, so we'll get into that in a second. But we kind of made a pitch separately to different members of the ExCo, and then they introduced us to each other. And we come from different perspectives. So I come from a TradFi background, mostly on Wall Street, and Charles comes as a crypto native and comes from a technology background. So between the two of us, we were able to kind of pull together a holistic story about how does the combination of the technology and market developments and how does that come together to impact what it means for a company like S&P Global. So at the highest level, so we sit in a strategy function. So at the highest level, our role is really to help the firm think about and execute a strategy that adapts our existing products and services and helps create a new generation of products and services that are fit for purpose in decentralized markets. And so, Charles, I don't know if you have a different version or different add-on to our origin story.
No, I think it's exactly that. And if we look at a few years back, or previous bear market, when you were into crypto and you were kind of vocal about that in 2017, in 2018 was kind of the victory of the skeptics that were coming back to you, telling you, I told you, you didn't listen to me. But this radical shift that represented DeFi changed everything. And we see that every day with the news that are popping up as if it was not a bear market with KKR and Citadel and Nomura and everybody is investing and building and so are we.
Yeah, no, that's fantastic. It's good to see the internal matchmaking that brought you guys together and you're leading the charge to create this new unit. And as you mentioned, there's a lot of big names that are looking at this space, but obviously the digital asset ecosystem is still very much in its nascency. DeFi especially, is only a few years old. So can you just talk through a little bit how you go about understanding the risk in DeFi? Like, what are some of the factors that you look at, and are there parallels to kind of traditional models that you are leaning on as you build out your expertise in this space, or the S&P's expertise?
Yeah, so maybe I'll kick it off, and then Charles, you follow up. So it is quite interesting having our two perspectives coming into this. So as I said, I've been in TradFi markets for a long time. I started my career as a bank regulator at the Federal Reserve of New York, and have lived through multiple financial crises, whether it's the Asian crisis, the banking crisis in Scandinavia or in continental Europe, obviously the global financial crisis, the Russian crisis. So there are components to how markets function that are directly applicable and experienced in decentralized markets. And you've seen that in the first half of this year. And that includes events, really kind of catalysts that are both idiosyncratic in nature and that have systemic implications. And so we saw that at play earlier this year with the combination of stories like Three Arrows Capital, Celsius, and Voyager as examples of that. And so those are themes and kind of relationships that we can draw from traditional markets, and that center around issues like leverage or the overuse of leverage, opacity and ownership and risks, and asset liability mismatches. So those have been centric to the CeFi portion of kind of a broader kind of crypto landscape. But how they get applied and extrapolate themselves into decentralized finance may be a little bit of a different color and take a little bit of a different shade. But some of the fundamental truths are there. And as a friend once said to me, like, gravity is gravity, and you're going to see gravity as well in the decentralized financial market, but it will just come with some specific and unique nuances and drivers. So
So really the thing is, if we want DeFi or crypto to really scale, I think it's one of the transformations. There's been also initially the rhetoric on DeFi was, we'll destroy TradFi, we'll just create something totally new. But then it evolved into, we want to thrive, and we basically want to become the new financial system and rails. And for that, we cannot have things like what happened with Railroads and Voyager and Babel, etc. And transparency on risk, which all of those were absolute black box. So in good aspect, DeFi was fine. Like, there were no real issue with DeFi. DeFi just worked as it was supposed to work. But we also know that the capital efficiency of over-collateralized platform is not enough to really bring trillions in. Like, the way market operate in general will be around reputation and it's uncollateralized. So we'll need to have an evolution, but this evolution will also need transparency on risk and just better risk management. And that's something where we think we may be able to help.
Yeah, and so it's a kind of a hybrid of two different worlds blending together from your seat, which is, the transparency and opacity and leverage, things that are not idiosyncratic to crypto, right? I mean, obviously we've seen that across your career, Chuck, from the bank regulator perspective. Like, you just highlighted all of those different crises, but then there are things that are specific to crypto, right? And so whether it's all the recent hacks or understanding counterparty credit risk that might be different or difficult in an on-chain world, what are some of the biggest risks in this space that institutions might not be aware of? Smart contract risk, protocol risk, or anything that you're evaluating or looking at that you're helping educate folks on, and how can they mitigate those risks?
I think, like, institutions are increasingly illiterate in the field, and they kind of have a view of what are the risks. Yes, hack are a risk, especially with breaches. So there's this question on, well, will it be a multi-chain world? Now most people believe it will be. I still have my doubt and believe that there is a chance, maybe not 100%, that, well, the long term there'll be only one, like there's only one internet and not many small separated and bridged intranet. But the risk overall is to be looked at different angles. So one of the issue is the fact that, for instance, when there is a hack, I think it's really hard to pretend that you'll be able to guess that hack and really find this risk. You can have white hat looking at your code aside from audit firm, etc. But the risk will always be there. There's always going to be somebody smarter that spend more time on it and find an exploit. Now, one of the questions that is never answered right now is, once you have the hack, are you still solvent, right? So we had two really different examples. We had Three Arrows Capital and we have, for instance, Wintermute. Both went on Twitter and said, we're fine. But Three Arrows Capital just died a few weeks after that. So if you start to have the possibility to maybe even have real-time visibility into the exposure of different actors, and there are technology for that, then it totally changes the game. Then you can build trust in the field, and then the field can scale.
One way I'd also think about it, Jim, is that TradFi players, as they onboard digital asset and crypto kind of into their business models, they really need and want to understand the types of risks they're taking, and that exist in the marketplace. And that's what we, as a rating agency and a kind of an organization that has a long history of providing risk assessments, hope to be able to provide to a wide set of audience, both crypto native and traditional investors, but recognizing that it's a moving field. So, DeFi's a couple of years old, and new capabilities are being born kind of regularly within the crypto and DeFi landscape. And probably the most important thing is that we, together with participant stakeholders in the ecosystem, kind of are adaptable and flexible enough to recognize new risks as they emerge and facilitate a framework that allows that to not only shine a light on it, but help organizations make decisions about how to handle those risks. So, institutional players are well versed in managing risk, and it's not eliminating risk; it's managing risk.
Right.
And so that's, I think, the role we can play. We can help shine that light on where risks exist by marrying our historical expertise and off-chain analysis and bringing in a new capability around on-chain analysis to provide that holistic picture to facilitate that accurate and relevant risk assessments that are needed now, actually, but will be needed even more so in the future.
Yeah, as more and more assets come into the space, absolutely, those measures would certainly be needed to get folks comfortable as they're continuing to evaluate exposure or deploying assets in this space. I think we talked a lot or a little bit about leverage and kind of borrowing and lending, and obviously Compound is one of the DeFi protocols focused on borrowing and lending. Curious, as you look at institutional participation, you mentioned, Charles, a little bit about over collateralized versus under collateralized or uncollateralized. Just curious, like how you're seeing institutional adoption or folks kind of looking at participating in protocols for borrowing and lending, and if you can highlight like any advantages or disadvantages of DeFi in this type of a role, in this type of a market versus TradFi from your perspective.
Well, one of the obvious things that everybody sees and was mentioned at DAS London, was mentioned in different places, is, well, the fact that the settlement is instantaneous in DeFi and thanks to like blockchain, and also the fact that it's going to be traded 24/7, right? Whatever is going to be, because there's a lending aspect, there's also the tokenization of everything aspect, and the fractionalization of those assets and all the derivatives that can be done out of that, and all of that will be 24/7. And that's a really big change. It just means that when traditionally dealer or trader would be sleeping in the US because the market is closed, now it's going to continue, and the impact can be pretty big.
Yeah, I think I kind of break it down to thinking about back office functions versus front office functions. And so the things that Charles was just mentioning, and that is pretty well understood, although maybe not fully executed yet, is the promise of blockchain, digital assets, crypto, DeFi, however you want to call it, to make the back office and market functioning more efficient, and as a result, reduce risk and bring down costs. And so that's, I think, kind of from what we've seen, lots of traditional players are kind of, that's where they've started their journey and looking at opportunities to kind of onboard Web3 type capabilities to kind of improve and enhance their back office. But I think actually the bigger disruption risk is probably from the front office. And that is, how does DeFi and Web3 enable the creation of new kind of capital pools and access to those capital pools from a new set of borrowers? And that is actually transformational. And so that's where I think the kind of longer term kind of promise and disruption risk from DeFi for traditional players is. And what we've seen in our conversations, at least with a lot of traditional players, is there's a significant investments that are being made from both financial and human capital investments to building sets of capabilities. But the overall external environment still, I think, is limiting for the execution on those capabilities. And so when I say that, I'm really kind of referencing the regulatory environment, the policy making environment, and creating a pathway for institutional players to kind of get more directly involved. That then becomes more symbiotic, and kind of the adoption rates can rise. And then we'll see, I think, probably a next expansion or an acceleration of expansion of capabilities as this money starts to move from traditional players onto DeFi rails assisted by policymaking.
And also, you need more tools, but it's also interesting to see how those tools are being created. So, for instance, derivative to be able to have credit default swap and be able to hedge the loan you're doing. Some new platform are interesting and are using the previous ones. If you look at something like Idle Finance and how they create tranching in other protocol where you don't have tranching, or Atlantis, where you can decide the rate you want to have, and if for the time that you're not taken into their pool, they actually put the money in another collateralized protocol. So there's the permissionless aspect always allows for more sophistication, new idea to come in. And there's probably many that will continue to come in that we don't even think of right now. And well, the more tools you have, the more interest you also get. And well, and the more and more it's going to affect and bring more people in.
Yeah, I mean, that's the exciting part about all this space is just the composability of all the different protocols and all the different apps, just to be able to create those types of different products and access points that, you know, in traditional markets don't necessarily exist because of just the structure that exists in TradFi versus DeFi. So we talked a lot about like the front office, back office, you know, different, kind of efficiencies or access that this is going to bring. How do you think about the transparency aspect in DeFi? Because, you know, as you see, the comparison CeFi versus DeFi and all that happen, you know, the opacity was certainly an issue. You see, you know, some lenders were taking, you know, unsecured credit risk from other counterparties with client funds. That's something that you wouldn't be able to do in DeFi, considering the transparency. But on the flip side of the coin, that might also introduce some challenges for institutions to participate because of the transparency, right? Like having your name associated with every trade or every position might not necessarily be advantageous for an institution's portfolio. So just curious, like the transparency aspect of this, how do you see that translating to like traditional financial markets? Is that an opportunity? Is it a blocker? Like how do you view that?
It depends which DeFi, right? So Compound, it's fully transparent. Everything can be seen. There's some other protocol where it's not like that, right? Like the HVB deal of Maker or Centrifuge and some other platform are doing real world asset, Goldfinch, even Clearpool, Maple, etc. All those, you don't have access to the lender operation. Not everything is on chain, right? So there is the funding on chain, and then they're giving money to somebody, and you don't have any visibility as a retail user, let's say, on, well, what is the risk that there is in this specific lender. So they'll have each different way, or either you have a delegate, either you have a rating for some different protocol. But at the end of the day, everything is not on chain for those protocol. What we believe is there's a possibility and there's a world where long-term, everybody and everything could be tokenized and on-chain. In such case, well, if you have the loan of your houses paid on-chain, then you could have full securitization on-chain, real-time visibility in what's happening in this structured vehicle. We're still very far from this. It might be coming, but now answering on the shorter term, there is visibility and there's not visibility. I think I heard from somebody saying that FTX has like 1 million addresses. So while you might be able to find them, it's always pseudo-anonymous. And if you go through a centralized exchange and you just found a new wallet from there, it's really hard, if not impossible, to actually know that, well, it is also from this specific player. So there are ways to edge that. But yeah, I don't know, Chuck, what do you think about it?
Yeah, I think, this will be one of the blocking factors, and is something that the industry, kind of broadly speaking, will have to tackle. And when I say the industry, I mean to both meet the traditional finance requirements and regulatory structures, the emerging set of regulations that are undoubtedly coming, and then what DeFi participants or stakeholders ultimately will need in order to conduct their business, in order for kind of stakeholders to engage and want to be engaged. It's hard to say kind of what the iterations of that is going to be, but I feel pretty confident that it's going to be we're going to get to the end game by 1,000 baby steps along the way. And I think that what's important is to realize that this is an industry that is characterized at its core by innovation and entrepreneurship. And once these big traditional players turn their intellectual capital and their money to solving these problems, they will be solved.
Sure.
And so the question is kind of, when is that going to be? And you can see a lot of the big players and policymakers starting to focus on it in a way that they haven't been focused on it before. And I think that will lead to that next iteration of capabilities that will solve some of these questions or challenges around privacy. And that would also include, I would include that also like KYC and AML, like the whole remit, kind of metric of blockers or blockages for traditional investor involvement in this ecosystem.
And to add on that quickly, so there is what we know the ZK roll.
All right. Looks like we might have lost Chuck and Charles. Oh, there they are.
Okay. Sorry.
So the ZK rollup might be a solution, but also even like that. So one of the solutions people were looking at earlier, and some are still, but it's less and less, was the private chain, right? So with the private chain, then you have all that. But a good example of how it's evolving is Project Guardian in Singapore, and how they are kind of pushing the creation of tokenization of treasuries and different projects, with the condition that it has to be on a public chain, because they want the interoperability. And it comes from, well, basically MAS and the Singapore government. And it's a really interesting development, because it comes from those actors. And basically, well, if you want more the permission access or more privacy, you'll just have to develop it, because they push the future to be public chain, which I think is a great thing.
Yeah, no, absolutely. And, I know there's a few, JP Morgan, I think DBS and a few other banks are participating in that project. So great to see also not just interbank collaboration, but also with the Federal Reserve of Singapore, right, with the regulator and the central bank. So it's great to see that collaboration. And then Charles, kind of going back to one of your earlier points on, some of the lending or participation that's happening in a hybrid model today of on-chain versus off-chain. That's an opportunity for S&P, right, to be able to provide your rating and your analysis and your visibility into counterparty exposures for those types of protocols that have a hybrid business model where not all of it is on-chain. And so having a trusted third-party source that's evaluating the risk is certainly helpful for the lenders to see, what's happening with their counterparties, because not all of it is on chain at the moment. And, as things get tokenized in the future, potentially there is a more on chain way of verifying the risk inherent in that product. But, that's an opportunity for S&P to kind of be the connective tissue between the old and the new world here.
And that's our role right now, right? In public market, when a rating is being done, we receive, and the analysts actually receive, specific private information that are not publicly available, and also because of that they cannot invest. They've got a lot of regulation around what they can do, etc. And well, it's a role that is needed, like on the short term, when everything, like short medium term, when not everything will be on chain, to have a third party which is not involved in any deal, loan, lending, etc., that has a view on things that may not be publicly available, but then can share an expertise and conclusion on the risk that comes from everything that could be seen. And that's for the short term. But long term, like if we really look at, maybe everything will be on chain. I both hope and think so. And but then it's going to be so much data that it's not going to be also something that will be easily manipulated and available to just to everybody. So then the skill set will evolve, but the need might still remain on how to tackle and analyze this data in a way that is relevant and well, being a third party not involved brings its own qualities.
Yeah, absolutely. And it'll be interesting to see how that evolves in a decentralized versus centralized. There's this kind of a hybrid structure that's being built in order to increase adoption, right? Because there's comfort in having an S&P evaluate these types of risks in the system. So I know we only have a couple minutes left, but I wanted to get your thoughts quickly on stablecoins and CBDCs, just because they've been talked about quite a bit. Obviously, some of the larger, market caps even in the space right now with kind of Tether and USDC. But I guess just curious to get your thoughts on stablecoins in general. I know that you've spoken a bit about the regulatory environment, and so just want to get your thoughts on how you see stablecoins kind of playing out, and how important they are to kind of this new financial infrastructure and from your seat.
Yeah, so from my seat, stablecoins play an essential role, particularly when you're looking at navigating between kind of on-chain and off-chain capabilities and assets and financing. And so, as a starter point, I think there can be a dual role for CBDC and stablecoin. And it's not clear to me kind of how the advances in CBDCs in like the United States or Western Europe or other countries is going to evolve, because there's a lot of issues that you can solve a lot of the challenges that CBDCs are meant to be striving without sacrificing or having the issues around privacy. So I think that's going to be a bit of a limiting factor on the CBDC side. But on the stablecoin side, as they're on and off ramp from crypto and real world, it's a fundamental pillar. And as a result of that, I think it is going to be really, like in the US, the primary focus from a legislative agenda. It's partly because it's so important, and it's partly because, in a way, it's like the most direct and easiest to address, particularly for fiat-backed stablecoin. So my expectation and hope is that sometime in the next year, we're gonna get support and pass a bipartisan legislation that enables and kind of facilitates the stablecoin, a framework around stablecoins. And I think that 10 years from now, when we look back with our 2020 hindsight, we're going to see that legislation was a critical juncture that laid the foundation for TradFi adoption into crypto. But that's just my own personal opinion. That may or may not be shared by Charles or an organization.
No, and I agree. And even in all those conferences, we always mention that stablecoin are building block of a lot of DeFi and a lot of the rest. And once you'll have at least some regulation, even if it's not the ideal one, etc., now you'll have the rules of the game. And the expectation that was mentioned a lot at the conference where we were was that, well, as long as there is rules, then you can play. The problem right now, you just don't know, right? Especially if you're regulated and big, etc. Like, can you own stablecoin? Well, it's not explained anywhere. So by default, you just won't.
You just
once it's going to be clearer on, well, kind of capital you need and how you need to host them, etc., well, then it's just a different game. And regulation will probably evolve because you got different jurisdictions looking at that at the same time. Some will win a lot of flow of capital if they do it in a better way. The other will react. So what we need is really to have the regulation starting so that they can then adapt.
Yeah, no, I appreciate your thoughts, and hearing bipartisan regulation, crypto, and innovation all in the same sentence is super exciting. So I think we're all excited for that. I know we're up at time, but wanted to give you guys any closing thoughts before. I know we're definitely going to have to do this again because there's so much to unpack, but wanted to hear anything else that you guys wanted to share.
The only thing I'd say is that I think these capabilities that DeFi and blockchain, the combination of blockchain, smart contracts, and cryptography is going to fundamentally change how markets work. And when I talk to my TradFi friends that I've spent my career with and tell them that we are in front of the most exciting 10 years we've ever seen in our career, they almost don't know how to react to that. I think they're in disbelief, but I do fundamentally believe that we are sitting at the precipice of a very exciting time in markets. And as TradFi gets more involved here and brings in the trillions or hundreds of trillions of dollars to ultimately lower the cost of capital and democratize access to financing, it's going to be a game changer.
Yeah, that's my view. Also, like being a crypto native, obviously, what is really interesting from my where I see it right now is to see this switch of all the people that were just not interested initially in Bitcoin, because that's the issue, right? You say DeFi, people understand crypto, then they think Bitcoin, and now more and more actually understand there's more to it than just the technologies, there's more to it than just Bitcoin, there's more to it than just crypto. There's DeFi, there's GameFi, which is another topic interesting to discuss maybe another time, and how games like Fortnite got huge revenue and you got skins that you cannot sell, and this might change, and how much then people will be willing to spend when they know they can get back some of their money with something like Play and Own. It's really exciting, and it's happening now. What nobody really knows is a pace, and when will we really get there? But it really looks like the internet and the evolution and all the transformation we had from there. So.
Yeah, no, it's super exciting. I mean, just the amount that's already happened, and when in that 10-year 2020 vision look back, it's going to be remarkable to see all that happens from here. And I'm sure, Chuck, when you said that same thing to your friends or your peers 2 years ago, 3 years ago, they probably thought you were even crazier than you are today. But the fact that now they don't feel like you're that crazy means that we're definitely heading in the right direction, and it's great to see all that's being built, and very excited for the next chapter. So again, really appreciate you guys taking some time to join us today. Would love to do this again some point soon. Really appreciate it, and thanks everybody for tuning in. We're gonna have another episode coming up in a few weeks, and we'll see everybody soon.
Thank you.
All right, thank you. Bye, everyone.